Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, April 9, 2015. I want to start the show, folks, by asking you a question. The question is purely simple. If you only watch the English show, click on the yes button. If you're a person who watch the English and the French show, click the no button. So the question is simple. If you only watch the English show, the Swing Trading Show on Decision Plus, click the yes button. And if you only watch the French and English show, click the no button. So I just want to actually see the viewers there on the Swing Trading Show to assess who they are. Now, with the market situation today, where are we? Right now, we're in the market situation where the NASDAQ, Dow Jones, all of them remain flat. The TSX too as well. The thing is, if you take a look at the situation, the NASDAQ made an attempt to break that sideways formation, but it lost its upward momentum. So we're confirming more and more this as a new neutral phase that's starting to be more consistent. Same thing too on the Dow Jones. And on the TSX, we have reached the top. The TSX is performing way better. Why? Because we have financial stocks that are doing pretty well. If you take a look at Royal Bank of Canada, TD, Bank of Montreal, Manulife, yesterday they announced that they made a partnership with an Asian company that would allow them to sell their products in Asia. So this stock is pursuing its rally. We also have a lot of stocks in the energy sector that are also resuming their upward momentum. But the energy sector, though, are there some new breakouts? Not at all. It's mostly stocks that are pursuing their rally. Suncor, well, this could be considered as a new breakout. It's an exception. Husky Energy is on the verge of doing so. I mostly think that right now, with this rally that we have among energy, it's mostly an opportunity to put a lot of stocks on your watch list. Because those of you who have not been able to get in last Thursday, last Wednesday on the energy stocks, and if you got in, let's say, the beginning of this week, well, right now with the sideways formation, you should watch to see what are going to be the new breakouts if ever the energy sector can go above 240 points. So this situation is a situation that makes the sector just become neutral. There are not a lot of opportunities for swing trading on the energy sector so far. Now, if we take a look at the data that we had some positive data coming out of the trade balance in Germany. There's also the Central Bank of England that kept their monetary policies intact. In terms of the list here, we thought we could have a movement among camera stocks because, you know, there's a tragedy that happened in the US where a police officer killed a man. And of course, when there's a brutality of the police officers, a lot of investors are rushing into camera stocks because they say that the cities are going to have more of those cameras under police force. So they were active at opening, but since then they remained flat. So it was not a movement that paid off as much as we would have liked. So Digital Alley, ISNS, all of them lost their upward momentum and they went up today at opening. There are some exceptions in terms of the breakout. There's Senvine, which is breaking out, but the stock has released its earnings today. And there's also Agrium. I know 2 days ago there was one viewer was asking me, is Agrium a buy? I said that it's within a nice neutral range. You could buy it, put your stop loss there. Right now it's confirming a breakout and a reversal of this downward trend, so you continue to hold on to that stock. You got it within a nice neutral range on that stock. Extendicare, also a nice breakout. Vigogo, also a nice breakout as well. Express Scripts is also a nice breakout too. It's actually the one that led the increase in the Nasdaq at opening. And CNAT, don't forget CNAT, and Ring Central could be a nice one. What I love with Ring Central is that it's clearly breaking an important resistance on a yearly basis. This is the thing that I love. It did a first breakout here, stabilized, and it does another again. So this is what I like with RNG. And DQ on the technology sector is also a breakout with an exit point at 25.54. So those are the best breakouts. CNAT will not be out of it. So those are the exceptions that we have today on the American and the Canadian market as well. In terms of the news, I'm going to do some news on the stock, especially Costco, Apache, and Zynga, because those stocks are moving a lot. And after, I see a lot of questions there, and I'm going to take all of your questions. Have here Zynga. Zynga is going down today because the CEO has resigned. He will be replaced by the founder of Zynga, which is Mark Pincus. So the stock had a big plunge there. Investors punished that stock. Brookfield Asset Management, they will buy some energy assets from Apache. And this is where Brookfield Asset Management is going up. And Apache is over there. It's selling some of its assets. It's getting $2.1 billion from its asset. Costco today, they announced that their same-store sales are going down, a decrease of -2%. And Rona here, this company, they said that they have already purchased $8 million in their share buyback program. They have a plan to buy up to $9 million shares. With this, an analyst said that the fact that I've already purchased 8 million out of the 9.2 million makes it more likely that Rona might hike its dividend. So this bullish momentum that we have seen on Rona has only been because the company has deployed its own cash to buy its own shares. It could be also a signal that they see their share at an attractive price and they continue to buy it. They say that this buying program could continue until after November 2015. So there's a possibility that the rally could continue on Rona, but at this point it's not a breakout. The breakout was on March 30th on the break of that sideways formation on Rona. So those are the news. Now let's take a look at some questions here. Do you think today's oil rally is an opportunity to buy energy? As I said, P, I don't think it's an opportunity. We believe that right now, by looking at the energy sector, it's mostly an opportunity to put stocks on your watch list. Stocks that are neutral, stocks like Husky Energy, for instance, could be put on your watch list. Stock like Canadian Natural Resources is forming right now a new sideways formation. Higher than $42 could be interesting. Enerplus as well, it's stabilizing after testing that support of February. So that stock should be put on your watch list, higher than $15. It's not a moment to buy again energy stocks, but to rather look at them, put some on your watch list, some that you have not been able to buy earlier. And whenever we have a new bullish cycle, that would be the perfect timing. But right now, it's not the timing. We're just confirming a sideways formation among the energy sector. Now, continue holding energy stocks bought yesterday. Thanks. Well, yes, there's no reason why you should get rid of them. The sector is going up today. So we're making a neutral formation. So when we have a sector that's confirming a neutral formation, there's no reason to get rid of your long positions. So for me, Todd, if you bought them yesterday, a little bit late, but continue to hold on to them. That will be my advice today. So Tracy, as I said to Todd, is should we believe? I don't know if we could believe that the rally could bring us higher, but what I know is that this rally just making us be neutral. The thing is that it's so tough for the energy sector to determine can we have the rally that can allow the energy sector to go above 240. Demand is not spiking up as much. We know that the OPEC will not cut their oil production, so there will not be a major increase among oil because there will not be a short of supply. The supply will stay the same. The U.S. economy is doing okay, I would say. The last employment report was not as great, but the U.S. economy is doing okay. Demand in Europe could allow energy stocks to do well because if Europe continues to grow, that's positive for energy. So there are so many fundamental factors, though, right? And this is why I think you should continue to remain cautious. And we cannot say that today's rally is going to be the point that will allow energy to rally towards its high, because you still have fundamental factors that are still negative, where energy companies have cut so much their drilling campaign that at a certain point, I don't see why we should have a rally while those companies have cut their production and cut their spending into the drilling. So for me, this is why I think that with this sideways formation that we have, it's better to put some on your watch list. If you have already opened last week, take some profit or hold on to your positions. But if we have a new bullish cycle, then you might open new positions. But right now, I cannot say that this rally is the point that will allow us to go higher because the fundamental reasons among the energy sector is not as clear to allow me to say that this rally will lead us higher. So there are other questions as well. I'm going to take them in the next segment.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have one interesting questions from Andre here. SLF and MFC, which one offers the most potential? Well, look at both. Both remain neutral, right? I'm looking at the yearly chart there. The thing is, SLF has a resistance that's there at 42.50, where from 39.90 to 42.50, well, it's what, 6 to 7% on Sun Life. But Manulife, though, has rallied. It's testing an important resistance. We cannot consider this as a resistance because it has only been tested one time, but this one here is more convincing at 20 to 25. And between both, which one offers the most potential? Technically speaking, I think Manulife is in a better situation because the fact that it's testing its resistance, if ever we have another wave of buyers among insurance stocks, that stock will confirm a clear breakout on a yearly basis. On a daily basis, it will mostly be a continuity of the bullish cycle. So I think if you bought that stock yesterday or you're buying it today, still okay as long as your exit point is at $21. And also Manulife, you have to take into account that the partnership that they have in Asia is something that's really positive, right? Asia is one of the biggest market. They'll be able to sell some insurance there. That's bullish, right? And for me, based on the fundamental reasons, I think that Manulife does offer the best potential, technically speaking as well, and compared to Sun Life. So if I have to choose both, I'll choose Manulife because of their partnership in Asia, and technically speaking, because if ever the rally continues, we will break an important resistance on Manulife. Exit point, $21. Now, when to buy IMO? Oops, what did I do? Oops. Okay. So IMO, it was clear that the entry point on IMO was when the stock broke that resistance here on April 6th. There were several breakouts in the energy sector, and IMO did represent that. It did reverse that downward trend. Now, IMO, when to buy it? Well, let's put a Fibonacci retracement on that stock. Okay, so we went higher than the 61.8%. Overbought. We're above the 200-day moving average. Man, it's getting so far. I don't know. For IMO, the entry point was 2 days ago. Except if you want to trade that stock, right? Buy it and get out if ever we go below that former resistance at 51.60. But you risk having a situation where we might have a correction on IMO or stabilization phase there. It's not a breakout. It's a pursuit of the bullish cycle. But if you want to trade that stock, okay, with an exit point below that support at $51. But it's not the ideal timing to get into a stock like that. The ideal timing was on April 6th on IMO because we did break that important resistance on IMO. But yeah, because it's overbought for me, I will not be as willing to get into a stock like that. But it's maintaining an upward trend. Overbought, yes, but volumes are on average. Technically speaking, it has reversed an important downward trend. So yes, you could trend trade that stock as well. There's so many opportunities, so many ways to trade a stock. It's not only when there's a typical breakout, but a stock like that, you could definitely trade it with a $51 as an exit point. So PLI between 260 and 270 a buy. Yes, 277. 277 is going to be a buy for PLI. Nice neutral formation. Overbought though, so there's a risk that the stock might go further down. This is why I would not get into it right now. Volumes have been declining. This is something I don't like, right? So I don't like the overbought situation. I don't like the fact that the stock has been in declining volume as well. And the MACD2 as well is confirming a negative bottom, a negative top, which is not good for PLI. So for me, only if it goes above 279 to 80 that I will get in on PLI. But it's in a nice neutral range, just like several energy stocks. It should definitely be put on your watch list for potential buy, but it's not a buy today. Now, as for the day trade of the day, it's not Hero, it's not AGSH, it's not FAS. No, it's that stock here, VLTC on NASDAQ. It has been recommended on marketgurus.tv, I think since 10 o'clock, if I remember right. 9:15, thank you, 9:15. So we're around this area. Clear entry point there. You could have trade that stock around here. Also give another entry point here. Now the stock is losing slightly some momentum, but the new entry point is going to be at 577 on a stock like VLTC. So among all indices, the TSX is the one that is standing out because energy stocks are rallying slightly. Not a lot of breakouts in the energy sector. Also, some stocks in the financials are helping to the TSX. The American market, the situation is different. We remain neutral. Above all, we believe that for swing trading, well, there are some exceptions. I've shown you the exceptions here. You see the exceptions here on the list. So those are the few exceptions that we have on the TSX and on the New York Stock Exchange. But I don't believe that today it's an appropriate timing to be in a buying spree, especially among energy stocks. No, I think it's mostly an opportunity to put a lot of stocks in your bucket list. And whenever we have a bullish cycle, well, you just pick up the best stocks out of your bucket list and buy them. But right now, it's not an appropriate timing to do so. So see you tomorrow on the Swing Trading Show on DecisionPlus.com.